If you're not selling to buyers, instead you're simply selling to stops. Now let's differentiate between the two. Buyers means new buyers at higher prices, for example. And that might be something that's a markup phase. You'd know why that would be happening, because value would be massively north, right? But if you're selling to new buyers, then of course you don't want to be selling to new buyers, because you're going to get a better price sometime soon. So why are you selling it now? But if you're selling to stops, that fresh air type feeling about trading should be very, very obvious. How many fresh air trades have we seen on here? Well, we sold not quite to stops. We were trying to buy from stops on the pound earlier on this morning. We did buy from stops here. How do we know they're stops? Because there's no actual selling coming in. How do we know this is stops? Because there's no actual selling coming in. So this is stops. This is just simply a movement of liquidity to try and get prices down into stops and take a bid away from that level. And you can see how easy that buy was at the bottom edges. It was beautiful. These are the trades we've been talking about literally since the starting session this morning. We've talked about getting the easy money trades where we've sold to no buyers here on oil, for example. There, we sold to no buyers. We sold to no buyers here. We sold to no buyers here. See the difference? We're not selling to any buyers. We're simply selling into what we think is maybe a little pool of liquidity in the stock, the easy money. The easy money, because obviously you're not getting pressed by the difficult money. You're not getting pressed by active shooters on this trade. When you look at the bonds and you see that very, very significant trade in bonds, look at the trade here. Is that not the easy sell trade? There's no buyers up here, guys. Look, there's no buyers. So what the hell is this? This is to get people on the wrong side of trade to try and see if it brings in some diddies that are willing to pay higher prices for a very obvious sell trade. Make sense? So there is some very, very easy trades you can take onto the books if you're inclined to take the easy stuff. If we look at the euro, was this easy? Well, let's take a look. Well, we know what the easy trade was. The easy trade was to be long here because there's no sellers coming in there. There's net buying at the lows from this previous level here, right? But when it came back up into this phase here, there's a lot of buying and it's getting jammed up here. So that's not an easy sell. That's a absorption sell. That's not an easy sell. That's absorption. So you've got to make sure you get pristine entry, and sure enough, it goes higher still. And then you see the easy sell opportunity. The only downside is you never got top edges at that stage. You lose one and you gain another, don't you? You lose the pressure by the buyers, but you then don't get the level because there is no buyers. Think about it. And therefore that results in that pretty simple, straightforward sell away from the marketplace here. So when we see the easy stuff, you can see how easy this morning's sell was here. Is that not really, really, really easy? Of course it is. Look, there isn't a single buyer on the euro into that high price. Does everybody see the difference? There is not a single buyer on the euro visit. Of course there's buyers in the euro, but the net positioning is massively bearish. And because the net positioning was massively bearish, when they tried to give a shout to the upside, they tried to give an idea of a high ball up here. Somebody suckered into the high ball here, and sure enough, the idea was then to sell into that easy trade. There is no buyers. That makes life easy for us. So we annihilated the euro off the highs. Was it a big trade? No. Was it a profitable trade? Yes. It still made 20 points, 20 pips. And then there was another easy sell when it came back up to test it again, isn't it? Look. It just comes back up to the exact same price. Where's the buyers? Tell me where the buyers are, guys. There are no buyers. So obviously the idea is to try and trap people into that top edge, and they just didn't trap anybody into the top edge. There's nobody buying. So the price just kind of exhausts out. In fact, we actually get a selling delta in here, not a buying delta, not a buying voltic. We got a selling voltic. You see, you say to yourself, a selling voltic in this situation has got to be a sell. So you're actually leaning on the sell away from that seller right there, right? And sure enough, you get an easy money 20 pips. Another high ball shout starts to bring in some small buyers, but again, just doesn't bring in very many. And then a high ball shout brings in a lot of buyers. So that's what you've got to be cautious about. A high ball shout brings in a lot of buyers. And that means that we've got to make sure we get the buyer getting jammed. We've got to get the lean against the Baltics. We've got to get that story right, and then boom, straight off the sell. So we can start to understand the concept of running trades against the delta story. This is a question that Paul's been asking each day, is about looking at the delta narratives. And deltas is all about experience. We said that in the classroom when we covered this question. Delta is almost exclusively about experience. You know, when we start thinking about the delta, we start thinking about how many deltas are coming in at certain points and certain prices, and we start adding that story to the delta narrative that we have. Well, that's what we're trying to see, guys. We're trying to see these.